Imagine waking up where all of your money worries were gone. You could leave that 9-to-5 job you hate and partake in your favorite hobbies all day. You could start a business or get a job you truly enjoy where you did have to worry about the salary. Well, that is the power of living off dividends. There are thousands and thousands of people doing just this. And in this video, we're going to share with you exactly how anyone can do this. You see, dividend growth investing isn't just about accumulating wealth. It's about creating a lasting legacy that generates income for years to come. Dividend growth investing offers a tangible path to financial freedom, a journey of building a future where your money works for you, creating consistent income from your investments. Living off dividends requires a substantial stock portfolio that becomes your financial fortress, generating income to sustain your lifestyle. At least it used to require a substantial stock portfolio. The good news is those days are over. You no longer need millions of dollars initially invested to live off dividends. But our path to living off dividends does remain the same. Our journey begins with dividends, those usually quarterly payouts from companies you've invested in. However, initial dividends, especially from established giants like Apple, start relatively low, often around a 0.54% yield, or Microsoft, which is around 0.83%. To put that in perspective, if you wanted to live off $50,000 a year, you would need $6,100,000 invested. I don't know about you, but I don't have $6 million laying around. But what if I told you you could make $36,000 a year with a relatively low initial investment? Now, if that interests you, keep watching as we break it all down. Now it is important to note that this video should not be considered financial advice. But what we're doing is looking at past data that if you did this 5, 10, 15, 20 years ago, well, you would be living this reality of living off your dividend income. Now let's not sugarcoat it. Patience becomes a cornerstone of dividend growth investing. You either need to work hard to get enough of an initial investment or be patient to let your money compound. But over time, these dividends have the potential to grow significantly, becoming a substantial and reliable source of income. Before we move to the secret formula, hit that subscribe button for more finance and investing videos and hit the notification bell so you never miss a new video from us. When it comes to living off dividends, it all comes down to the numbers. We need to understand how much a year we spend. The average person spends around $67,000 a year, but guess what? That might not be your perfect benchmark. It's all about personalizing this journey to match your needs, dreams, and comfort level. Maybe you spend $36,000 a year, or maybe you spend $100,000 a year. Now, let's put all of this into practice with a real-life example. Meet Nick. He's embarking on this very journey with us, aiming to generate $3,000 a month, or $36,000 a year in dividends. Together, we'll walk you through the steps to make that goal a reality. But before we dive into Nick's journey, let's take a moment to understand the foundation of this financial strategy. First, let's make sure we understand what dividends are. Dividends are payments that companies distribute to their shareholders. I think of them as your share of the company's profits, a tangible reward for being a loyal investor. And why do companies do this? Well, dividends are a way of saying, thanks for believing in us. They're a slice of the earnings pie that you get to enjoy. Dividends come in different forms, from cash, stock, or even property dividends. It's like getting a dividend buffet where you can choose what suits your taste and investment strategy. Here's where it gets interesting: dividend yield. This is the number that helps you gauge how much income your investment is generating. Here's how to calculate it. It's the annual dividend amount divided by the current price of the investment, expressed as a percentage. This percentage is key to understanding how efficiently your investment generates that sweet passive income. Here's an example. Imagine you own shares in Company X. Each share earns you an annual dividend of $2, and the current share price is $50. Plugging these numbers into the formula gives you a dividend yield of 4%. For every dollar you've invested, you get 4 cents back in dividends each year. Neat, right? Projected dividends over 40 years are a valuable tool in your financial toolkit. Calculators help when planning for the future. It's essential to consider the power of projected dividends. These dividends are a glimpse into the potential income you can accumulate over the long term. By using dividend calculators, you can estimate how your dividends might grow over a 40-year period. However, achieving the dream of living off dividends soon can be challenging for most investors. It's like planting the seeds of a mighty oak tree They need time to take root, grow, and eventually provide ample shade. Similarly, your investments need time to mature, and your dividends need time to accumulate to a substantial level that can sustain your lifestyle. Yet, there's a clever strategy that can expedite your journey to living off dividends. Enter covered call ETFs. These ETFs, such as Child and JP, allow you to earn a dividend yield of 11.5% and 10.5% by following this unique approach. This generates high dividends while offering the potential for stock appreciation. Think of it like this. Imagine you own a rental property and you lease it out to a tenant. The tenant pays you rent in exchange for the right to live in your property. Similarly, by selling call options, you're essentially leasing out your stocks to other investors. They pay you a premium for this right, an additional income stream on top of the dividends. Plus, it's important to note that covered call ETFs tend to focus on stable, established companies, which can provide a layer of security to your investment strategy. This innovative approach allows you to blend both reliable income and growth potential, setting you on a faster track toward your financial goals. Imagine receiving a bigger paycheck every month, just like you would from a job. Covered call ETFs make this a reality by regularly distributing dividends, typically monthly. This steady income stream can provide the financial stability you need to cover your expenses, reinvest, or even explore new investment opportunities. In essence, covered call ETFs create a blend of income and growth. This two-pronged approach fuels your journey toward living off dividends and positions you on a swifter trajectory toward achieving your long-term financial goals. Diving into discovering high dividend options leads us to business development companies, or BDCs. These companies specialize in providing financing to small businesses, nurturing their growth. In return, BDCs distribute high dividends to investors who support their endeavors. Some examples of BDCs include Heirs Capital Corp., BlackRock Capital Investment Corporation, Goldman Sachs Beck. Investing in BDCs means you're not just financially backing small enterprises, but also positioning yourself to reap the rewards of their success. Your investment could generate substantial dividends as these businesses thrive, creating a win-win scenario. Venturing further, we also can encounter the world of high-yield real estate investment trusts, or REITs. These investment vehicles offer you an accessible pathway to real estate ownership, granting you a slice of the property market without the intricacies of property management. When you invest in high-yield REITs, you're effectively becoming a partial owner of income-generating properties such as office buildings, apartment complexes, or shopping centers. As these properties generate rental income and appreciate in value over time, you stand to collect a stream of significant dividends that can substantially contribute to your financial goals. However, venturing into high-yield REITs demands careful consideration. Economic trends, market conditions, and potential risks should be thoroughly researched and analyzed before committing. A well-informed approach ensures that your investments align with your financial aspirations and contribute to your long-term success. The distinguished group of dividend aristocrats beckons for those seeking a blend of stability and growth in their investment portfolio. These elite members of the S&P 500 index have displayed their resilience and commitment to shareholders by consistently increasing dividends for an impressive 25 years or more. Lastly, let's discuss dividend aristocrat. Dividend aristocrats refer to a select group of companies that have demonstrated an exceptional commitment to rewarding their shareholders through consistent and increasing dividend payments. These companies are typically part of the S&P 500 index, which includes 500 of the largest publicly traded companies in the United States. Some of examples of these companies include Coca-Cola Company, Johnson & Johnson, Procter & Gamble Co., McDonald's Corporation. As you start exploring high-yield tickers, it's essential not to limit yourself to a single industry. The financial landscape offers a rich tapestry of opportunities, and among them are closed-end funds and master limited partnerships. Another factor to consider is the actual appreciation of the stock itself. If a stock has a high dividend yield but continually loses value in its overall ticker, then the dividends are great, yes, but your initial investment might be left with $0. So don't just chase high dividend stocks. These high-yield investment options have benefits, drawbacks, and considerations. By exploring a range of options, you can strategically tailor your investment portfolio to align with your unique goals and carve out a path toward achieving your financial goals. Now let's break down dividends as a path to financial freedom and how much you need. At its core, dividends are the rewards reaped by shareholders from the collective success of the companies they've invested in. These payments are a direct result of profit sharing, a gesture of appreciation for your role as a shareholder. And when it comes to exactly how much you need, it's all about the numbers. Knowing how much you need is the first step, and then creating a plan to reach that number. For example, we have another video right here on our channel that shares with you 8 high divine stocks. We'll put a link to that in the description. But let's break down some numbers. For example, Nick is looking to make $36,000 a year with some options that pay 15% dividend yield, which would require just $250,000. No, not $2.5 million, but just $250,000. Looking for $100,000 per year and want more growth stocks with good dividend options. Maybe REITs are what you are big on. Well, they have a 5.10% dividend yield, meaning you would need about $2 million invested to hit $100,000 a year in dividends. Remember, there is no perfect way, just the perfect way for you. And remember, sharing is caring. So if you like this video, hit that like button and share it with your friends. Together, we can take steps toward building a future defined by financial independence and fulfillment. Thank you for joining us, and again, make sure to hit that subscribe button for more investing and finance videos. See you in the next one.